Hello guys, good day to you all. As been journey today, I want to analyze this NZDCHF from both fundamental point of view and technical point of view. I hope you find the information contained in this video very useful. First and foremost, I want us to look at the interest rate differential between New Zealand dollar and CHF. Remember, the New Zealand dollar interest rate is given by the Reserve Bank of New Zealand, and that of CHF is released by the National Bank of Switzerland. So I want us to Google let's compare interest rate of major currencies. Okay, let's compare the interest rate. Let's check it. Let's check it. Let's see if we can get it. All right. 2022, let's meeting. Okay. So let's look at the Swiss National Bank that releases the interest rate of CHF. You can see it here is minus 0.750, minus 0.570, which means the interest rate on CHF right now is negative. All right. And when you have a negative rate, of course, you know there will be low demand for that currency. All right. Actually, it is going to be very beneficial for the economy of Switzerland because it is certainly going to drive investment in that country. But of course, globally, there will be little or no, there will be little demand for CHF because it attracts a negative interest. All right, nobody wants to demand for a currency and that currency, will not add value in his hands. But in the other way around, let's look at the second currency, which is the New Zealand. Let's look at the Reserve Bank of New Zealand. It's keeping interest at 1.500% right now. Can you see that there is a big difference between the Swiss National Bank CHF interest rate and NZD interest rate? Okay, we have a difference of about 1.75%. You can see a very big differential, which means that more people are demanding for NZD far more than that of CHF, because NZD is going to earn you more interest if you buy it than buying CHF. And we know from the concept of demand and supply that any currency that is in high demand is going to have increase in price, and the one that is less attractive because of the interest rate policy or the like is going to attract less demand, and the one that is attracting more demand is going to increase in price. So from this one right now, from this interest rate figures we are seeing right now, it is clear that we need to look for buy opportunity on New Zealand against CHF. So now, from fundamental point of view, we have seen the rate decision as a basis, to begin to look for a buy opportunity. All right. So now we are not going to base our analysis only on technical alone. We're going to add some fundamental, which we have seen. Now let's look at technical charts. Let's see technical chart on the daily. We see that technical chart on the daily is shown with this. Now I'm not going to treat this one as a market that is going to come down to break this low. I'm not going to treat it that way. The reason why I'm not going to treat it that way is because I have seen the interest rate report on New Zealand dollar and CHF. So I'm seeing that CHF has an interest rate of 1.75. Yes, New Zealand dollar has interest rate of 1.75, while CHF has negative 0.75. So there is no basis. Of course, there's no basis for me to start to move forward to NZDCHF breaking this low. I don't look forward to that. So what if that is the case? What do I have to do? What do I have to do in my analysis? Based on the fundamental report I've seen, I'm going to treat this one as an impulse. I will treat this one as a three-wave corrective structure that is over here. So I'm going to treat this one as an impulse. So if I will treat this one as an impulse, then it means that I should be able to define appropriately the level of correction that I'm expecting. So if I take my field and feel this impulse from here to here, you can see that the retracement has come between 0.5 and 0.618 retracement level. Can you see here? See it here? 0.5 to 0.618 retracement level, which is just adequate and sufficient for me to think that the retracement is over. But when we get to smaller time frames, we'll see if the retracement is over and is ready to go on lower time frame or not. All right, so this daily, so let's clear up and go to 4 hours. All right. So in coming to 4 hours now, you can see that we are treating this as a corrective structure, and it's been correcting over time here. It's been correcting over time here. Can you see? It's been correcting. So this correction, we want to see whether this correction is going to go this way, go this way, go this way, and boom to the upside. All right. We need to perform some tests on this to find out if this is going to happen or not. Just as you know, in medicine, before a doctor can carry out one particular treatment or the other, they are going to find out, they are going to do some investigation, they will do some check on what they want to do to know whether, to know what to do, to know the kind of treatment to offer, and the same thing is applicable to all other professions, including trading. All right, you want to carry out some tests on this particular market to know if we are going to go for long or we are going to go for short on this particular market. So the first set we are going to see, the first test we are going to perform is what is called fake flag test. Okay, fake flag test is a test that will inform us if a flag that is developing is going to break down, and continue to go lower, or is going to boom to the upside. So how do we do fake flag test? How do we do fake flag test? I'm going to tell you. I'm going to make use of RSI. I'm going to make use of RSI to check if we have a divergence on this flag or not. All right. For instance, between, let me show you again that divergence is measured between two swing points of an impulse. You see a push here, you see a push here, you see a push here, and you see a push here. We want to see if there is divergence between, for instance, this push and this push. You can see this swing point, push down to create a swing point, push down to create a swing point. All right, when you come here, you see this push down here that created this swing point, gave you this level here on the indicator. Another push here that created this swing point actually created a lower low. It's a lower low. This low is lower than this one. This is lower low. Then you have another point here. But the truth is that as this one is creating a lower low here, this is not creating a lower low. This one is creating a higher high. And by virtue of creating a higher high shows that the pressure of this last push down, this pressure here, guys, is not as much as the pressure here. And in football, you often hear that you are as good as your last result. Okay, so if the last set of pressure that we had here was not as much as the last set pressure that we had, even though it made a lower low on the price, but on the indicator, it's not making a lower low, it's actually making a higher low. So for that reason, we are seeing that there is less pressure to the downside on the chart. So by virtue of that, we are beginning to see that an upside is imminent in this chart. And if we are able to get an upside, it will confirm to us that the rate decision on NZD, which is 1.75, is higher than that of CHF, which is minus what? 0.75. Okay, and if you have something like this interest rate is higher here, so NZD should buy over CHF. So we're expecting a massive move. If this rate remains the same for a couple of months, we're expecting a massive move. So we have carried out a check to show that an upside is imminent, just as we have seen from the divergence here. All right, so the next thing we have to do right now is to go to 1 hour and find out what is happening lately. You know, we are beginning to see divergence from this level. We want to see what is happening lately on the current market structure. You will see it here quickly that you are seeing a structure here, which is a complete corrective structure. You have a push here, you have a push here, you have 1, 2, 3 in between. This is a corrective structure. This is what is called a running flat corrective structure. And then when in this running flat corrective structure, you have a push here. So most likely you are going to have a push that is almost like equivalent to this length that you have here. So you can see from here that this push you have here is not equal in length to this push that you have here. This one is longer. So, and in most cases, the length of the push you have here, you also get it here. And that might be the last push to the downside before you get the buy opportunity. You can see from fundamental point of view that NZD should buy over CHF. Therefore, NZDCHF should be a buy. But by virtue of making use of technical analysis, you will now see that the buy opportunity we are looking for is not ready. So you cannot trade fundamental analysis alone or trade technical analysis alone. You have to combine the two analyses together. All right, and I will show you at the end how you now combine, behavioral analysis and making use of, session analysis. You combine everything together to make your decision. So if we're expecting this length here, this length that you have here, if you are expecting it here, it then means that you must have this corrective structure to come up and break down. All right. So if you expect it to come up, first thing you must check is what is the appropriate, level of retracement that you think will be adequate for you. If we are looking at it this way, we are having a level 0.5% retracement here, and we are having 0.618 retracement here. So if that's the case, for instance, if we are expecting this market to make a breakdown at this level, then what is the roadmap to getting to this level? What are we expecting? It then means that we are going to be expecting a situation where this current move up will continue to push to the upside, continue to push to the upside, continue to push, probably, consolidate here. After much consolidation here, we expect it to come up to grab liquidity here. Let it grab liquidity here. By the time they come here to grab liquidity, we're going to take a sell opportunity. Remember that, here it has gotten to the appropriate retracement level that we feel is sufficient. But we still need to check the left side of the chart, which is here. We want to see whether we see a big supply that corresponds to the level of retracement we are expecting here. Do we have a big supply? Oh, yes, we do. If you check here, guys, here, if you check this candle, guys, check the next candle, this candle that formed before this big one, you see it here. You see the candle that formed after it, you see it here. So between this level and this level, guys, there was no demand. All supply. And I told you in the chart, it is either you have excess demand, or you have excess supply, or you are in equilibrium. Right here, between this price level and this price level, there was no equilibrium, there was no fair value, there was no excess demand over supply, there was only excess supply over demand. And I keep telling you, these are the levels that bank recognize, because they are writing on their books how they executed orders for their customers. So now, between this level and this level is a big supply, and we're expecting this market to come up here before we move for sell opportunity. So what I normally do is that I'm expecting a situation where an Asia session will give me a range here, and if I'm able to get a range here in Asia session, and I have a boom here to the upside from New York session, that will be good. Between this level here, I will now check, all right, if London, Asia give me this range, London give me this pull up to the upside, which some of our fellow retail trader friends will keep buying. They keep buying this. They don't know that the market is coming to grab liquidity. So if I'm able to get this pull to the upside, what I do is I look for psychological level between here and between this price level and this price level. What do you mean by psychological level? Psychological level is a whole number, it's a whole number price level in the chart. What do I mean by whole number? 0.6300 is a whole number. 0.400 is a whole number. And if you talk of sub-psychological level, it can be middle of the psychological level. So if you have psychological level of 0.5, 0.50, then another one 0.60. Then between 0.50 and 0.60, you have 0.550. So that middle of the range, that median, whole number is called sub-psychological level. So between here, 0.30. So I'm expecting this pair to fall between 0.6300 here, or falling at, or coming up and falling at 0.6325. Okay, 6325. If it doesn't fall here, I'm expecting it to fall at, if you cross this level, I'm expecting it to come over to 0.6350. All right. Any area here, is that here or here or here, it will fall down. But I don't expect it to get here, because if it's getting to this level, the liquidity has been grabbed, it has been picked here. All right, and we have the massive impulse here. So this is a correction. I don't expect correction to get to the beginning of the impulse. So I still favor between this level and this level. So especially if we have an Asia session range here and a liquidity grab to the upside to pick liquidity here, then in the New York session, you can be looking for a massive sell of this. So as soon as we break this low, very essential, you have to understand this perfectly. As soon as we break this low right here, every break of the previous low in this pair is a potential buy opportunity to the upside, reflective of the interest rate figure that we have seen on the on the fundamental realm. Okay, because we have interest rate that is better, that is on the side, of NZD than that of the CHF. All right. So for that reason, we are expecting this market to come to the downside. So as soon as it breaks this low, you will now notice that there is a kind of parity, there is a kind of equal sizes in the length of this big move of the impulse that form this correction. By the time this one break to the low here, you now see that here, this two here is equal to what? These two here. So as soon as they are equal, you now look for a level or a price level. All right, like something like 0.62 here, right? 0.62 here. From here, begin to look for buy opportunity to the upside. And if the interest rate decision on NZD and that of CHF still remain the same, then you should be expecting a big buy to the upside. But before that big buy comes, remember, you have consolidation here. Let it pull up. As soon as it pull up to this side, I'm looking forward to selling down. All through next week, once this sell-off is coming from here, all through next week or this week, you want to sell off up to this level. But as soon as it break this low, then I get to around 62, 0.6200, begin to move for buy opportunity to the upside. Okay, so that is it right now. And maybe if I must ask, add a little, I must add a little extra to this analysis. I will now try to look at this in terms of wave analysis, and we can see that we have corrective structure. We have a corrective structure here. Okay, 3 waves up. You have this connector in the middle in form of 3 waves, and then you have what? 1, 2, and 3. This is actually a complete WXY corrective structure. Okay, this is W, this is 3 waves down, W, 3 waves up, X, and then 3 waves down, Y. All right, so when this Y is complete, when this move down is complete, we now want to try to find divergence between W and Y. Okay, I'm plugging the RSI. Want to see W here, see it here, gently. Want to see W here, and want to see Y here. Want to see whether this is lower than this or this is lower than it. If this is lower and the Y here is higher, that is a divergence, and that is a proof that we are going to have a big buy opportunity from here to the upside. That is reflecting the interest rate analysis we did on the realm of the fundamental. So this is just a quick tip and a quick analysis on NZDCHF. I hope you find it useful. If you did, remember to share this analysis to as many people as possible. Thank you. God bless.